Welcome traders, I'm Adam Harris. And this is your weekly overview. So first off, I do want to say that this week there is about as high impact news as you can get short of actually having an election, and there's a lot of it back to back, and it accelerates from Wednesday, Thursday through till Friday. So the big finish on Friday is out of the US is non-farm payroll data. So if I just go back a little bit this week, starting off on Wednesday, we have PMI and CPI data coming out. I'm predominantly now focusing on the UK, Europe, and the US. We have an ECB press conference. We've got ISM manufacturing coming out of the US. We've also got FOMC. So we've got the Fed's interest rate decision on Wednesday. So Wednesday is going to be just incredibly volatile in terms of spikes. And usually what this does is it gets traders to consider their positions and trade around those events. So either they don't trade at all, or they potentially reduce their risk exposure, or they just become more selective about what they trade. But absolutely, to ignore what's coming up this week is incredibly dangerous. On the Thursday, starting right off sort of straight away midday, we've got out of the UK, we've got the Bank of England's interest rate decision. Out of Europe, they've got ECB's monetary policy statement and their interest rate decision. US then comes up with initial jobless claims. Then there's a press conference out of ECB. There's just so much going on Thursday, and of course Friday, the big finish. Starting off in the morning with out of the UK composite PMI and services PMI data, finishing off of course with the US non-farm payroll data. So there's it's just massive events throughout the week and just adding a lot of volatility. Even for swing traders on the higher time frame, there's going to be some impact there. If we have a look at the market, the dollar index has not quite hit $100 yet. I'd like to see it tap that. The trickiest thing, the least knowable thing this week in terms of probabilities is, do we start off with a weaker US dollar and finish with a stronger one after non-farm payroll, or do we have a bit of a stronger dollar at the moment, which then finishes off weaker? We are absolutely overdue for a correction. I've been saying this for a couple of weeks. We could just see that gold and euro and sterling and currencies have continued to climb, very hungry against that weaker dollar. That weaker dollar has been charging that $100 index level. And heading towards it, it's almost there now. So the question is, what is it going to do this week? But certainly you'll notice if you are in different asset classes, you'll see a lot of instruments are sitting right near major resistance levels, actually in most cases, with the exception of say the dollar index, which is close to support. But you've got gold, you've got the Australian dollar, Kiwi dollar, you've got euro, sterling. All these ones are sitting just at a major level, and the timing is not by accident. They've all headed towards that level kind of to line up with this week. So it's absolutely going to be increased volatility and bigger spikes. In principle, what I do want to say though is that the tech stocks have been lagging a bit, and they are looking very nice and bullish. So that makes it tricky because they are looking nice and bullish. I think there's going to be a lot of nice opportunities there. That will flow through to other tech stocks, believe it or not, or tech derivatives such as cryptos. Cryptos are also, even though they're also very overextended, they seem very keen to continue. Because most of them took the biggest hit, they look very keen to catch up now. We can see that the Dow and the S&P have also managed to do very well. What I would say, and this is noteworthy, and I haven't seen this in many years, is that the Russell 2000 is also looking really nice and bullish. We've also got other indexes around the world, the FTSE 100, the DAX, the Hang Seng out of Hong Kong, also looking incredibly bullish. Now, traditionally, they tend to wait or take their cue from the US markets to see what they should be doing. They're not doing that now. They're very bullish regardless of whatever is going on in the US. That is a great sign. That's not a sign of a weak market. That is a sign of a very, well, you could say it's a hot market. It's definitely quite bullish. So that's really where I'm going to be focusing this week. I expect that some of the markets that have been bullish in recent weeks might have a bit of a correction. But I wanted to say that for me, I think tech stocks are looking as though they feel like they need to catch up now, and they're all starting to look incredibly bullish. So that's very attractive. I'm going to leave you with that. I want to wish you a great week's trading, and I will see you again in future weekly overviews. Thank you.